Zach's Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Well, today we're going to talk about stocks that you can buy while the market undergoes some year-end tax selling. And Kevin Matras, our market technician and top stock screener, is here to help us out with that.
Yep.
So obviously you feel that that's what's going on in the market here. Tax selling, year-end tax selling.
Yeah, definitely.
And it all has to do with the fiscal cliff. We can blame this on the fiscal cliff as well.
Yeah, this is all the fiscal cliff's fault. What happened is that after the election, I believe the market just became acutely reminded that the fiscal cliff is, we're just racing towards it, and it's less than 2 short months away. I think most people know what the fiscal cliff is, but for those who don't, who have been hiding under a rock for the last couple of years, the fiscal cliff really is just a bunch of tax cuts that are set to expire. And then you have these massive across-the-board spending cuts that are supposed to kick in. This is a critical time for our economy because if all of these things were to manifest at once, they're saying that it could devastate our economy, and they're also saying that it could have a huge impact on the world, which is why the G20 and the IMF, they are pleading with the United States government to get this thing figured out. Right. Now, the good news is that I think many people believe that there will be some kind of compromise on the fiscal cliff, and I think there will be as well. I think the majority of the tax cuts, especially for the middle class, are probably going to stay in place. And I'm hoping that the spending cuts, I'm hoping instead of these massive across-the-board cuts, I'm hoping that they can be redefined. I'm hoping they can be a little bit more thought out, and I hope that they are spread out over a longer period of time. But that still means we're going to have a fiscal cliff in some way. It's not going to do away with it. We're going to have some kind of cliff that we're going to have to contend with. But if they're able to redefine this and do it in a thoughtful way, I do believe the markets ultimately should be able to get past it, and we should be okay.
So then your thesis of the market undergoing year-end tax selling pressure, this is what the main pressure is on the market right now?
Yeah, so, my prelude about that this thing hopefully will be fixed, I think that is good news for the economy and the world long term. But again, there are going to be some tax cuts that I believe are going to be allowed to sunset. Plus, you have some new taxes that are automatically going to kick in because of the Affordable Health Care Act. So tax rates for long-term capital gains right now is 15%, right? If those tax rates are allowed to go up, they can go up to 20% and maybe even 21.2% because there is an additional levy due to the Obamacare Act. And if you are a high-income earner, those long-term capital gains could go as high as 25% because there is an additional 3.8% tax that is also going to be levied on high-income earners because of the Affordable Health Care Act. Right. Then I also read somewhere that if the Buffett rule that Obama has proposed goes into play, that could even raise long-term capital gains to 30%. So it's a quandary that many investors are having to face. Not only are you talking about long-term capital gains, though, you're also talking about short-term capital gains. Short-term capital gains may go up. Tax rates on dividends may go up. So think about this. If you have amassed, let's say, $100,000 worth of gains in your account, right, long-term gains, you could sell now and you could pay $15,000 in taxes, or you could wait, hope for the best, but potentially have to pay $25,000 in taxes next year. So now let's say that you're a wealthy investor. Let's say you have tens and tens of millions of dollars in gains in your account. You could sell now and pay only a 15% capital gains tax, or you can sell later and potentially have to pay up to 66% more in taxes. This is why so many top advisors are recommending to their wealthiest customers to sell now to lock in these favorable tax rates that conceivably could be the lowest tax rates, long-term capital gains tax rates that people see for the rest of their lives. So again, who knows what's going to happen, but do you really want to take the chance of blowing this opportunity and having to pay significantly more by waiting?
So the screen that we're going to talk about here then it presents a strategy to avoid this tax-induced sell-off. Is that what we're doing?
Yeah, so I do believe that the market started to come under pressure due to this tax-induced selling. Look, if you got a ton of money in the market and you thought Romney was going to win, you weren't going to be selling your stocks because you thought things were going to stay the same or possibly even get better. But now that Obama is elected, whether you voted for him or not, it doesn't matter. Right. So this is the new lay of the land. Now that it really does look as if the tax rates on some individuals are going to go up, you need, if you plan on capturing these favorable rates, you need to sell your stocks in a hurry to be able to benefit. Now, you still got about a month and a half, but do you really want to wait until the last conceivable day, right? So what I am doing is I'm trying to focus in on the stocks that should see the least amount of tax-induced selling, and I want to focus in on those kinds of companies. So what we've done with this screen is this. I just had my clicker here. Here we go. So this is how the screen starts off. I am focusing in on the top 50% of industries. Okay. So I want to focus in on good stocks, and the reason why I want to focus in on the top 50% of industries is because our testing has shown that the top 50% of industries outperforms the bottom 50% of industries by a factor of more than 2 to 1. So I want to make sure I have the odds in my favor that if I'm hunting for stocks during this pressurized market, I still have the odds in my favor. Okay. The next item is I'm looking for stocks with a favorable Zacks rank. That means I want to find stocks with a Zacks rank of a 1 or a 2. You could look at 3s if you wanted to, but I'm focusing on 1s and 2s because the 1s over the last 26 years have shown an average annual return of over 25%, and the number 2s have shown an average annual return of over 18%. So that item alone further puts the odds of success in your favor. Okay. Plus, if you are focusing in on the 1s and 2s, you know that those are the companies that are receiving the highest amount of upward earnings estimate revisions, which is a great forecast for the next 1 to 3 months. But all of this is set against a backdrop of finding those companies that meet all those other criteria, but I want to make sure that the stocks have underperformed the market over the last 52 weeks. So I want to make sure that they are positive for the year, a couple of percent. I don't want to see people selling those underperformers due to tax loss selling incentives, but I also want to make sure there's no tax gain incentive as well. So I'm looking for stocks that have underperformed the market. These are the ones where nobody has amassed any great gains, but because of the positive industry rating and because of the favorable Zacks rank, these things should be left alone for this tax-induced strategy selling, but these are the ones that look like the next couple of months should be really great shakes for them.
So the screen itself produced 50 stocks. You're going to tell us about 5.
Yeah, every time you run this screen, it looks as if you're getting around 50-ish. So once you do get this list of companies onto your radar screen, you may then want to narrow it down by looking at some of your best valuation metrics or some other item that you know has proven to be profitable to help winnow down this list. Okay. But this is a great list to start from. Here's 5 of these stocks, and it's a very diverse group of companies. You've got Blackstone Group, Camden Property Trust, Euronet Worldwide, Hormel Foods and Resources Connection, In the article I wrote, I kind of give a synopsis of each one, showing, this is how much they have gained for the year. Some of these are only up like a fraction of a percent, but they're all ones and twos. They have great forward outlooks, great upward earnings estimate revisions. So look at the article and really dig into these companies, but also you definitely want to get this screen because you want to see all of those companies that are on the list, and I would say you want to see what it's producing week after week after week as you move into the rest of the year.
Okay, do you own any of these?
Not right yet.
All right. To peruse that written article that Kevin talked about, all you need to do, if you're not there already, is go over to our website, zacks.com, and link to it off of the home page. And if you want to find out more about the Research Wizard, that's the tool that Kevin uses to achieve all of these screens, zacks.com/researchwizard is the place to go on the wide open web. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.